Hey traders, TG Watkins here. It is March 30th. I hope everybody's doing well out there. And yeah, for anybody else who's new or hasn't come over and joined the Moxie indicator trading room, yeah, this is where you can get in $7 trial for 30 days. And yeah, come check it out. We do a lot of education, especially in this time of the market. You know, there's a lot of talking. I'm on the mic quite a bit. And it's a good environment. We have a lot of other traders in there, you know, just like you guys in there. They're chatting to each other, and we're having a good time. So come on over, check it out, see what you guys think. And as far as the market goes, I kind of wanted to take a step back and look at a few things bigger picture. So if we look here, this is the SPX monthly, and you know, for as difficult as this market might seem, and or bearish as a lot of us are thinking, because you know, well, hey, we've got this banking crisis, we've got interest rates going up. I mean, we've got all this stuff. We've got a lot of, well, we definitely have a lot of headwinds out there. But I got to say, the market is doing fairly well. It's doing fairly well in through here. Participation is still not great, so that's something I want to be talking about in just a little bit from this. It does seem as though money is being concentrated in the kind of the big mega cap tech stocks, which is not great as far as, you know, we need participation, breadth participation. But if we look from a market perspective, the market has actually held up really well, and it has been, you know, just staying afloat for everything has been thrown at it. I really like to use the monthly 10 SMA for kind of larger trends, and you can see why I like it, because it does tend to work pretty well, and you can see where we get our transitions. And we you know, basically, unless something really changes in the next day, we're gonna have our second month closing above the monthly 10. And that's progress, at least. Now, of course, it doesn't have to stay that way. Of course, price can go lower. You know, it will depend on what kind of information we get in the future, you know, the economy, recession, all that kind of stuff. We'll have to see what is priced in. But the fact that it is able to stay up over here, hey, that's looking pretty good. So if we take this and we kind of go back, and you guys can kind of do this too. I think it's a good education for you just to go back and look at stuff. I like the monthly 10 because you can see when price does get over the monthly 10, it does tend to show that we're going to you know, have a new bull market, or we're going to be going up, or something like that, that at least the market is doing all right. And you can just see anywhere in through here, of course, you know, there are dips, but when you get back up over the monthly 10, it wants to go up. So if we take this idea and we kind of keep going back, and we can, I think we was talking about this in, again, the Moxie trading room, and we were running over some different dates. I think this is, yeah, 1995. You can see that when price got over the monthly 10, it carried for a while. Of course, it took a little bit of time. You can see it kind of had a little sideways transition in through there. And if we zoom in, we had some areas in here, I think 94, yeah, 1991 was another one. You can see it flagged into the monthly 10, but it was moving up. And I thought this one was actually pretty similar to where we are now, as just far as how price is over the monthly 10, but just kind of hanging out and not doing a ton. There was definitely a lot of recovery that needed, and so it took a while for the market to just kind of get back into shape. And you know, feels like this. It feels like we're right now over the monthly 10. It's kind of just hanging out for a few months. I mean, look how many months, because each bar is 1 month. Look how many months that was kind of just going sideways until it finally did take off. So I don't know, maybe we're kind of in that situation to where it's going to take some time. But you can see here again, following the monthly 10, and when it gets underneath the monthly 10, it's a downtrend. And we've been under the monthly 10 for a while, but now we're over it. And you can see here, followed it to the downside, finally got up over. Then this is where I also thought, this was a late 70s, to where the market was, you know, not super clean. That was probably a very challenging time to trade in the market and what was going on, because, well, yes, we were moving up, but there were, you can see there was kind of move up and drops, move up and drops. Obviously, there was a lot of activity in there, so you know, we're traders, we like activities, but some of these things were probably pretty big as far as movements to the downside, and not necessarily a clear trend to the upside. So we could be in something like that. We'll have to see how long it actually lasts for. But yeah, just take this, go back, look at the monthly 10. You can see, you know, nice big oscillations like that. So we got that. And then if we actually look, if we come over here, look at the VIX, you know, one of the phrases is VIX low, look out below. So, you know, we're kind of getting back into this area where, you know, maybe we need to watch out on the high side because, well, the market's getting to a point where there could be an inflection. Just something to keep in mind. If this does move up, at least right now, the Moxie indicator is saying that it's going to take some work in order for it to change. I mean, the Moxie indicator is very far below zero. So for the bulls, that's good news that we're seeing that. And then if we come over to the UVXY, I like this one, we can see basically the same thing on the hourly chart. The Moxie indicator is still very far below zero. So even if this thing does start to kind of set up, it's going to take a while for it to turn. So, from an index standpoint, okay, we're making headway. The dips have been getting bought. The market hasn't fallen apart, even with the financial banking situation. But it is tough out there because it's just not a lot of participation. We've been looking at breadth, and it's just kind of divergent to the downside. In fact, not a lot of. If you look at the Nasdaq versus the top 100. Not a lot of names are even over their daily 50 SMAs. Only like something like 20%. So a lot of this is being carried by the larger tech names. I'll get into those too, showing you guys where the opportunities are. And yeah, we just kind of need to be aware of this. Also, UVXY is kind of coming back down into an area where it gave some turmoil for the markets. So I'm looking at these volatility products for that reason, to just make sure we're not caught off guard. But so far, there's just nothing quite to do, nothing to take action on quite yet. So if we come over here and look at the NASDAQ, hey, look at this. We're trying to make new highs. So as much as the market is doing this, I got to say it doesn't exactly feel like the greatest, the easiest situation for all of this to be doing it. But if this continues and kind of keeps crawling its way up there, this is similar to what I was saying last week in the videos is, all right, it's doing the thing. They're moving. And in fact, as far as the Moxie indicator goes, here was a dip below the hourly 50. The Moxie indicator was above zero. That's a trampoline move. And we can kind of see that. In fact, if we zoom in a little bit, you can see that helps explain why we've shot up. This is literally like a trampoline. That's why I called it that, is you had price kind of jump down like it was on the trampoline. It shoots back up like that. And that was the move that we got. On the daily chart, we could see part of that was price basically came down and tested the 21. Not totally perfect, but basically did something like that. So we've got the NASDAQ that's up. We've got the SPY that's, up, neutral. And then we have the semis. If we look here, they're kind of doing the same thing. And if we look here on the daily and hourly chart, we can see this was also a trampoline move, price below the 50, but the Moxie indicator above zero. So that's what the definition of a trampoline move is. And we're basically up here at kind of new all-time highs, new highs. The move, the dip down was more severe for the semis. You can see price actually came down to the daily 50, but the body stayed above the 21. So a little bit deeper, but kind of that same principle, same idea. And we'll just have to see if this can keep going, ride it till the wheels fall off kind of thing. But so far it's moving. But then we come over and we look at, say, the Dow, it's not doing great. We'll be perfectly honest on this one, not doing that great. There is a bit of a trend line like this, and we've pretty much hit the top side of the trend line twice. So I find that to be very interesting. I don't really have a read on the daily Moxie indicator, like just not much is really happening there. But as far as one of the Moxie patterns, there was a elf shoe. So you can see that price got very, very oversold, and now it's moving back up. I mean, that's what happens when you get price this far away from a moving average, is it tends to want to go back to it. So that's what we've been seeing. Now, it obviously doesn't do it in a straight line, so what does it do? Well, basically a double bottom, which is what I call an elf shoe. So here's the leg, here's the heel, here's the arch of the foot, ball of the foot, and now you're getting that elf toe. So somewhere in through here, I would be expecting a bit of a pullback. We are running into or getting up close to a downtrending daily 50. So I don't think it's just going to kind of keep going up like this. Typically, you're going to kind of come up here, maybe pull back, gather a little strength, and then if it's going to go, that's typically how it's going to fashion out like that. The other thing we can look at on the hourly chart is price went down. Notice that the Moxie indicator went higher. That's positive divergence. That is a form of positive divergence. The other thing we can look at here is another trampoline move. Like I showed you the trampoline move on the SPY and the NASDAQ. And then if we look at this, we can see that price came down below the hourly 50, but the Moxie indicator above zero. So trampoline move. And then if we look a little bit closer, we can see right in through here that price actually tapped the hourly 50 and moved up. So it has been working up, but we kind of have this issue where, this isn't exactly an uptrend. It's a reversion to the mean. It could be a bear flag. We're not quite sure yet if it's going to be that, but basically it's such an oversold move that it's just a reversion to the mean so far. And that's going to be a little bit problematic. When we have the Dow like this, and we have the IWM in the same place, it's going to be weighing down on the market and the rest, and so they just aren't going to be able to move up with much energy and force. So here we have the IWM, same thing, just very, very oversold, but we've talked about this before where these oversold conditions do tend to get bought up a little bit. We'll have to see how long that can last. And then, where there's opportunity, I think, is in XOP, if you guys are interested in shorting something like this, because if you look at XOP, and again, talking about the monthly timeframes, just like we were talking about the SPX, we now have price under the monthly 10. So you can see how it used to be over the monthly 10, moving up. Now it's underneath, and we have a fresh Moxie price signal to the downside. So yeah, it's looking to me like XOP, energy, oil, that kind of stuff. It looks like it's going to be bearish. Now that should also be challenging for the market. That should be bad for the market, because it implies that the economy is slowing down, all that kind of stuff. So we'll have to see how much this really leans into it. The other thing, if we look at the inverse ETF of the XOP, it's DRIP. And for those of you who know the Moxie patterns, I'm looking at a 50, 200, 50 pattern maneuvering through there. And so I want to see if price actually starts to pull back and hold the daily 50. Now, of course, this is a leveraged inverse ETF, so it's not exactly one-to-one, but I think that that is where there is some opportunity if you guys are looking for that. Beyond that, it kind of goes back to the tried and true. Microsoft making fairly good new highs. NVIDIA, we know that one's making new highs. Again, you could see a trampoline move right here, price below the 50, the Moxie indicator above 0. And so if these are areas that you are willing to trade, they are still working, and they'll be working until they don't. So as I said earlier, trade these things until the wheels fall off, basically. So, all right, guys, well, a little bit shorter version for you on this one. We're going to be kind of reconfiguring a few things and getting back out to you. But remember, if you're interested in how I look at the market and how I teach things, come on over to the Moxie Indicator Mastery, which is the Moxie Indicator Trading Room, and you can get a trial in there, and we'll see you there. All right, guys, thanks again.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.